Welcome back. This is James Duerr, your host of the James Duerr Show and the 7 Steps to Financial Success. We have a special guest here, Matthew Batters, and he's an attorney with Drought Drought Bobbitt LLP. Thank you, Matt, for being here today.
Oh, this is my pleasure. This is my first time on AM radio. So
there you go.
Honored to be on your show.
Well, you know, AM radio has rebounded from, it's crazy now. You know, like talk show is number one in drive time now. So you think radio would be, I mean, just like music? No, talk show is number one in drive time, and talk shows are number 2 in all of radio. So it's number 2 in all of radio, and then number 1 in drive time. So you'll see a lot more, and we're glad you're here today. We've been talking a little bit. We're going to have you, if you got any questions, we're talking about long-term care now, but I wanted to have you in because you think it could relate a little bit to what you're going to talk about. But what I wanted to do is kind of have you join me during our final part of our long-term care discussion, so you can just jump in there anytime you want to, Matt.
Well, and one of the things I'll talk about, and you'll hear, I will not use the term will when I'm talking about what people need to be thinking about. I'll keep using the term estate plan, because everybody tends to overlook what might happen if they become incapacitated, and that those months or years right before they die, so much can happen that might completely undermine whatever they've said in their will. Mm-hmm. So long-term care insurance certainly fills the gap financially from that perspective, and it would certainly help at least deter the temptation to invade assets that you might have other intentions for.
Yeah, and that's the main thing about long-term care. You want to retain assets. I've met a lot of I don't want to call them older women, but elderly women who their husband's been in long-term care, and they tell me if it wasn't for the long-term care insurance, they would have been destitute.
Oh, and we represent a lot of families that are land-rich, cash-poor. Talking about your ranch owners that might have the 10,000-acre ranch that they've had in 4 generations, but what happens when they need $10,000 a month for long-term care? They have to face the decision to either sell part of the ranch, take on debt that they've probably avoided their whole life, and if they have right insurance, like you've been mentioning on your show, it's a non-issue.
Yeah, and it's like you know, there's a lot of reasons. That is one reason people get long-term care insurance, because they want to have a legacy.
Right.
They want to pass on a legacy to their kids. Especially, that's a great example. If you have a home, you have your ranch, and you need the money. You'd hate to, because once you sell it,
it's
you're
gone.
never getting it back at the same price.
That's
I can
right.
tell you that for a fact. So you don't want to be forced to sell your assets, and you don't want to be forced to liquidate anything else. So that's where long-term care comes in. So we were just talking about the state of Texas has a great free planner. It's called your long-term care planning kit. And again, the reason why the state wants you to have it is because they want you to have long-term care because they don't want to pay for it. And we should all take care of our own expenses, and you get long-term care, and you get that taken care of. So let's talk a little bit, finish up our long-term care, and then we'll get with Matt about wills and family law. So long-term care, it's a policy. It's much harder to get than regular insurance first. So if you can get regular insurance, that's good. But you know, when I have my clients in the past, you know, they're age 65 or over, that then they decided to go for long-term care and do a policy, they were either denied flat out, or it was so expensive they couldn't afford it. So, you know, Medicare does not pay for it. Now, that's a misconception. There's a small period of time that they'll pay for it. Less than 100 days, or you know?
I don't know. I just know it's a narrow window.
Yeah, you have to go into the hospital, and then you have to have like a 3-day hospital stay, and then you have to go directly to the nursing home for it to pay anything. And then after 100 days, it's gone. So, or 90 days. So usually long-term care policies have like a 90-day wait period, and that's if your Medicaid or Medicare would have provided for that. But you know, it has to be a certain way that you go to the hospital, you get right out of it, and if you're not improving every day, they kick you out. So you have that period of time you need to have cash available, assets available to pay for long-term care during that period. But one thing I do also preach is, you can use some of your own money for long-term care, and if you extend your waive period from 90 days to like a year, you can save a lot of money per month, and that's what I'm all about, is saving money for my clients. So go to the James Duerr website, JamesDuerr.com, and we'll talk to you all about the waiting period. And then your benefits. You get paid benefits, on a daily basis, up to, you can choose from $50, maybe up to $350 per day. And but it's capped now. So back when long-term care started, it was like unlimited. They would say, well, we're going to take care of you for the rest of your life. Well, guess what? All those insurance companies, that part of their company went.
That was back when the life expectancy was much shorter.
Shorter too, yeah. We can do it. Now people were living to their late 80s, late 90s, and so they had to redesign everything. So one thing to know about long-term care is your premiums can be raised. Okay, it's not like whole life insurance where your premium never waivers. With long-term care, they can submit documentation to the state and try to get their premiums raised. Now, what we do is we deal with companies that have only they've only raised their rates one time in the history of that company. So there are certain companies you want to work with that have not raised it. There's lots of things. There's so much that we can talk about. Again, I'm available to meet with your groups, meet with you individually, and I'll bring a bunch of these books for your guests. And let's talk real quick about, is long-term care good for you? So if you have assets of at least $75,000, a total assets $75,000, then you're a candidate for long-term care. If you have less than that, your premiums are probably going to be more than you can afford. And if your annual retirement income is at least $25,000, or $35,000 to $50,000 for a couple, then you're a candidate for long-term care. And also, just like insurance, you need to be able to pay your premiums without ever canceling. You don't want to start paying premiums and have to cancel. You want to make sure that you can pay your premiums without having any type of strain on your family. So, and we'll sit with you and make sure it's suitable for you. And there's another testimony here from Barry and Sarah. Now, they're age 67 and 64. Now, that's the problem. People are waiting till they're 67 and 64 to buy long-term care insurance. You need to buy it early. You need to buy it in your 40s. You need to buy it in the 50s. But, so Sarah and Barry, let me read a little bit of this. He and Sarah consulted with an insurance agency about long-term life policy. And what he wanted to do was protect his assets. So let's say, Matt, you have a boat, and your boat, you have a $100,000 offshore fishing boat. You go down to Port A, right? What would you do with that $100,000? Would you insure that boat?
Oh, of course.
Yeah. So say you have $100,000 in assets. Would you want to, that's just like a boat, but you actually it's just in cash instead of in a boat. Yeah, would you insure that asset?
That's a great point. In general, people have no hesitation insuring their assets that go down in value and don't make them money. And then conversely, they don't give enough thought to their assets that retain their value or make them money. So it's exactly right.
Yeah. Well, the state of Texas has it right on that. I tell you, we thank the governor, thank the state of Texas Insurance Board for putting this out and getting that education. Again, if you need copies of it, let me know. You can use, and it also talks about how you pay for long-term care insurance. It doesn't have to be all premium. It doesn't have to be all come from your long-term care. You can use your personal savings, and then you can use step 2 of the James Duerr program, which is life insurance benefits. You can use your cash value life insurance, and you can pull money out of that to use. You can use step 3 of the James Duerr program, annuity contracts. So that's step 3, and that's what they have listed here. And then they have step 4 is home equity, bonds. That's our step 4 is the stock market. So we are laying the groundwork that you may not have to pay that much premiums if you do the safe money, if you invest wisely with our financial professionals, then you may not need that. There is a great one here that they have another one about Barbara, and she's age 51, and Barbara is a single nurse administrator, and she has taken care of countless people who've been dementia and needed long-term care. So she knows the advantage of this, and she had her aunt that had long-term care that from a stroke, and that was a huge eye-opener for her. So at age 51, she got long-term care because she wanted to be independent. She didn't want to rely on anybody else. She was single. She needs to take care of herself. So, but this is a great example. What I've been saying all this time is buy long-term care in your 40s and your 50s. It's going to be cheaper going into retirement, and everything we're saying here is correct. So we're going to have Matt. I'm going to give Matt the format right after the break, and he can kind of give you some things to think about for estate planning. And I love what you're saying about let's think about estate plannings and not wills. Let's look at what we're going to do for our future generations. Let's look at what we're going to do if we have a long-term care event.
Right.
There's lots of moving parts here that you need a qualified
attorney. Just like
attorney.
the 7 steps that you promote, don't pick and choose like a menu. Do them all because they all relate to each other.
Couldn't have said it better if I said it. Thank you, Matt. So stay tuned to James Duerr, the James Duerr Show at 9:30 a.m. Also tune in at 5 p.m. for the San Antonio Entertainment Show. And I think we have the Tobin Center and the Salvation Army. We got lots of different entertainment going on this afternoon. So tune in at 5 p.m. We'll be back right after the break.